What's up, you guys? Welcome back to the Average Joe Investor channel. In today's video, we're talking a little bit about some great stocks for December 2023. I've got a new monthly dividend stock spreadsheet out for the month, and we're just going to look at some of the best dividend stocks to take a look at right now based on the highest yields and also based on the upcoming ex-dividend dates. Let's dive in. All right, so here's the monthly dividend stock spreadsheet. As an FYI, you can get access to this spreadsheet as well as all the other spreadsheets I use on the channel, access to the Discord community, and access to all of my portfolio strategies and trades by joining the Patreon community. If you're interested, check out the link down in the description below. All right, so right now we're sorted based on the yield. So let's take a look here at the top yielding dividend stocks here. And by the way, this spreadsheet tracks all of the dividend stocks that have been raising their dividend now for at least 5 consecutive years. So it doesn't necessarily have every single dividend stock that pays a dividend, just the ones that consistently raise their dividend every year for at least 5 consecutive years. So right now, the top yielding dividend stocks, let's go ahead and make this a little bit easier to look at here. We'll hide this column. Top yield right now there's actually 4 of them that are yielding over 10% or at or above 10%. We've got Acres Commercial Real Estate Corporation yielding 12% currently. We've got NextEra Energy Partners yielding 11.4%. We've got Arbor Realty Trust yielding 11%. And then we've got Hercules Capital yielding 10%. And with the exception of NextEra, all of these are yielding pretty close to what they have been over the past 5 years. If you take a look here and filter only by the green color in the price right here, you can see all the dividend stocks that are trading within 5% of their 52-week low. Potentially could be a good value right now. We've got Pfizer trading at $26.13. Kimberly-Clark is trading at $120.84, which is really close to their 52-week low. ExxonMobil's at $101, which is close to their $97 52-week low. We've also got the Kroger Company right here and Hershey right here. Conversely, you can also change this filter to all of the ones that are in red, which shows all the dividend stocks that are trading within 5% of their 52-week high, which could be an indicator that it's a little bit overvalued right now, but there are quite a few of them, as you can see. Here's a look at all of the dividend stocks that are currently paying a dividend in the month of December or early January here. Upcoming, we've got right here, the 14th just passed, so we'll look at here this coming week. We've got the 19th. We've got 2 on the 19th. We've got Broadcom and Medtronic. Both of those are going ex-dividend on the 19th. We've also got Altria Group and Philip Morris right here going ex-dividend on the 20th. And then fast forward here, we've got a few more on the 28th. We've got US Bank, Mondelez, never heard of that one, Illinois Toolworks right there. So some opportunities depending on what your strategy is and what you're trying to accomplish. Let's take a look at some examples where we can utilize the Dividend Expresso method to capture, yes, the dividend, but also maybe some capital appreciation and definitely some option premium. Okay, so come on up here this week. We have a few different options. Let's go ahead and first take a look at Philip Morris right here, ticker symbol PM. They're going ex-dividend on 12/20. Here's a look at the option chain. You can see right here, the dividend is going to be $1.30, and the ex-dividend date is 12/20, which means we have to own the stock prior to 12/20. So we'll look at maybe an expiration of 12/22 and then 12/29. All right, so here's our dividend capture spreadsheet. Today is the 15th, and we've got our 130 dividend, our ex-dividend 12/20 right here. Let's work with a strike price of, first off, 95. Okay, so just above our current strike price. So we'll assume that there's a little bit of capital appreciation between now and the time of option expiration. Let's first take a look at 12/22. Which is coming up here just a few days after the ex-dividend date. So 12/22 expiration at the 95 strike price. We can collect somewhere between 15 cents and 45 cents. So that's quite a big spread there. Let's go with 30 cents. So plug in here, 30 cents. And in this situation, one of 3 things is going to happen. Number 1, the price drops hard below our strike price and we hold the stock. Okay, that's option 1. Option 2 would be that the market price goes above our strike price and we get assigned at expiration. In that situation here, we would collect $30 in option premium, $130 because we collected the dividend, and then $54 in capital appreciation, which would be a total cash flow of $214. Total capital requirement, $94.46, would be a 2.27% return on capital. And if we could do something like this on a weekly basis, we could then annualize that to 118% return. Now, it's not necessarily realistic. We could do it every week, but still an amazing potential return. The other possible scenario that could play out is the price goes above our strike price before the ex-dividend date, and we get early assigned because the option holder actually wants to collect the dividend. In that scenario, we'd collect $30 in option premium, and we would still have capital appreciation of $54 for a total cash flow of $84 because we don't get the dividend in this scenario. So $84 in 5-day period is 0.89% return on capital or 65% annualized return. That's not too shabby. Now let's say we wanted to avoid any potential for assignment, and let's move out to the 12/29 expiration, which will leave enough implied volatility so that we don't endure an early assignment. So 12/29, same strike price, 12/29.95, we'd collect between 45 cents and 60 cents per share. So let's assume 50 cents per share, so $50. We'll change the option premium to 0.50, 12/29. In this situation, we'd collect $50 in option premium, $130 in dividend, capital appreciation of $54 for a total of $234, which would be 14-day holding period, which would be a return on capital of 2.48% or 64% annualized. So definitely a situation where we probably want to go with the first option. Let's look at another example. Let's look at Medtronic PLC, ticker symbol MDT. MDT is set to pay a dividend right up here of 69 cents, and the ex-dividend date is 12/19. So we could work with the 83 strike price, which is just above our market price, or we could go 82 and go a little bit in the money. Let's start with 83 and the 12/22 expiration. We'd collect somewhere between 41 cents and 50 cents per share. So let's go with 45 cents per share. In that scenario, if we happen to get assigned at expiration because the price of MDT went up above and beyond our strike price by expiration, in that situation we'd collect 45 in option income, 69 in dividend income, and $39 in capital appreciation, for a total of $153 against a capital requirement of $82.61, or a return on capital of 1.85%. If we could do it on a weekly basis, on a recurring basis with this stock and other stocks, then it would be a return annualized of 96.57%. There are lots of variations for how to use this dividend capture or dividend Expresso method here. You can go at the money, just above the money, go in the money a little bit and get a little bit of downside protection. Lots of ways to structure these trades, and we've seen a lot of people in the Patreon community experience a lot of success. One other thing we'll take a look at here, the dividend stocks that are on the steepest discount based on their yield. So whatever the yield is now compared to their historical 5-year yield. The biggest one here would be NextEra Energy Partners, NEP. But we've got some other ones down here that you may have known, like Dollar General right here, trading at a 49% discount. UGI Corporation at 44% discount. Whirlpool is trading at a 42% discount, currently yielding 5.7%. And you can even go further and say, I want to only look at the high quality stocks that are trading on a discount, like Kings and Aristocrats and Champions here, all above 25 years of consecutive payments here. And we can see that stocks like UGI, Target, Walgreens, Leggett & Platt, First of Long Island, all trading at significant discounts, yet they have significant dividend payment history. So depending on your situation, you may or may not want to utilize covered calls, but some of these dividend stocks might be great opportunities here in the month of December. Hopefully you found some value in this video. Make sure to leave your 2 cents down in the comments below. It's my goal to respond to as many comments as possible on the day I post a new video. That's all I got for you guys. Have a great rest of your day, and thanks for watching.